This week's markets have been incredibly poor. We saw one of the biggest monthly falls in the beginning of September, and it was somewhat coincidental with Nvidia's stellar earnings announcement last week, despite the company's poor stock performance. Therefore, I believe that talking about Nvidia and your thoughts on the quarter, as well as how it performed in comparison to your expectations, could be a good place to start. Yes, observed Tom. I mean, it was arguably the most expected earnings in a decade or more. Isn't that right? Just eliminate the noise in terms of numbers when it comes to watch parties and other Nvidia-related matters. Think about all the AA over the last few months on that. The Blackwell weight is now gone. There is a 125 to 1 supply to demand ratio, and nothing in the data or analytics leads me to believe that this is changing. Regarding Whisper figures for the quarter minus 30 billion, 33.5, they obtained 32.5, which is marginally less than Whisper. After the stock drops, we examine a 2 billion beat. Here, we think that's pretty likely, right? However, there's no way Jensen and the group will lead to anything close to that, especially in a quarter like as Blackwell's. You go away, in my opinion, with an acceleration of the demand thesis, an improvement in yields, and eventually, a setup for the next part of the story. I understand, though, where the sell-off occurs and people wonder, oh, is this it? Is this concluded? In terms of overall AI, we are in the second inning of a 9-inning game. Because it goes back, and this is the most crucial part. If anyone learns anything from this conversation, it's that the rest of technology is multiplied by 8 to 10 times for every dollar spent on an Nvidia processor. No. But Tom, I believe it only emphasizes that we're living in a time of unprecedented technological progress. One may argue that it began with the internet, but I would argue that it is more akin to the ideas of the fourth industrial revolution. Where can numbers go, in my opinion, if you continue with some of these names and start to trajectory it out? Best case, bull case. At that point, it seems as though you are no longer discussing valuation in terms of P/E for the upcoming year. Yes, you are correct. These are, after all, enormous tail arcs. A side question. Will there be an Apple vehicle in the upcoming years? And how big of a market do you think the Vision Pro will have? We therefore think that the Apple automobile will be released in 2026, and it may be unveiled later this year when tea leaves become available. We think it's an OEM agreement, and Apple won't do it in the end in a way that is comparable to the Foxconn partnership, where you have Apple and Nvidia instead of maybe a few manufacturers that I believe they are in talks with. They call it a coachmaker, I suppose. It would resemble an Apple car in certain ways. They will most likely have one in Asia in addition to one in the United States. We've been talking about it, of course. We originally believed it would be 2025, but it's actually 2026. But it all started with the innovation that Vision Pro is bringing to the table. Today, developers receive $3,500. In 2 years, the spectacles will retail for $1,200 and come with 300 apps. They are entering the next phase, and in the next 2 to 3 years, from Vision Pro to the App Store to the Apple automobile, I think this will be Cook's greatest accomplishment. And speaking of the Apple car, that's where autonomous technology will come into its own, because by the end of the decade, 5% of automobiles will be driving themselves. I understand. Fantastic. Is there anyone who would like you to go into further detail about your opinions on Palantir? Since you've previously stated that you believe it to be among the greatest pure-play AI plays. Yes, and let's face it, I think Palantir is institutionally despised, because they can't see that in their spreadsheets from their Park Avenue office building's 10th story, they believe it to be hype. We've spoken with hundreds of prospective clients, and Palantir is arguably the greatest pure-play AI platform available. AAP is now applying its experience in government to the private sector. So Tom, don't expect things to happen quickly. Thus, it's like, oh, it didn't happen like you expected, every quarter. We are discussing the year 2024, which we think will be a major turning point. AAP was just made available. I believe conversion will be astounding, even if you go back 6 months. I believe that this is a term that will completely change how the enterprise and the government are viewed. And I believe that Palantir will always be called first in every significant AI deployment of any kind. It's a nice example, though. Palantir is a prime example of this, It's quite simple to get sucked into the naysayers' trance on this platform. SEMA knows such specifics. SEMA, you are aware of the recent focus on utilities' year-to-date performance above that of chips, which is diversifying the trade, right, Kelly? Yes, during the past month, there has been a noticeable decline in the AI trade. These are the major companies, if you look at names like Nvidia, AMD, and Broadcom, who focus on the technology and software needed to power the hyperscalers with their AI models. As you can see, those stocks have dropped by at least 22% from their all-time highs. Other firms in the AI server space, like as Supermicro, Dell, and HP Enterprise, are also under pressure, as is Micron, a company that has seen a drop of about 45% from its 52-week high. Jordan Klein of Mizzo is informing customers that there has been a recent decline in buy-side activity in semiconductor companies. Interest in software stocks is rising and sentiment is not holding up. Speaking of software, over the past 2 months, companies ticked under the IGV ticker have performed far better than chips, thanks in part to Adobe, which is scheduled to release its earnings later this week. As you can see, the sell side has underperformed the stock, but they are still extremely optimistic about Nvidia, the semiconductor behemoth. Morgan Stanley maintained its overweight rating today. Gross margin concerns, according to analyst Joseph Moore, are exaggerated. The greater risk, in his opinion, is macro and its possible influence on capital expenditures. However, Goldman's technology team thinks that in order to truly revive the Gen A trade, the market requires clarification on 3 fronts: Nvidia's 2026 financials, additional proof that AI models can be made profitable, and the ability to absorb costs. Yes, I believe it to be evident. I don't know where you stand on this, but this year has been exciting in every way. I mean, the upside, if you want to call it that, if you want to call it a bubble. Now that we have passed that mark, the only thing left to wonder is this only a sideways correction? Are some of these more prominent names still to come? In totality, you've already included in some pretty healthy earnings over the next 2 to 3 years. Nvidia made it quite apparent when it stated, look, the Blackwell chip needs to perform the way it's done. Its manufacture is encountering problems. Then there is the need. Double ordering has been the biggest thing that investors in semiconductors have had to constantly watch out for years. Did Meta, Apple, and Google place excessive orders in case they didn't receive what they required? Then, as soon as they all decide, oh, we don't really need these, you start to read news about the chip's presence in China and other countries. Therefore, while we do own Nvidia, and it is an incredible chip, I believe that you should own it in moderation. It has completed all of the tasks we have given it. Now, it just needs to develop the next lay and possibly release some funds. It's already 20% lower than its top after all. It's probably down by over 30%. Indeed, it exceeded 130. By 2022, the stock had dropped by 50%. Thus, these equities must be a part of your portfolio. However, it should be diversified rather than consisting of the stocks that you have owned for the past 10 years. I'm fully committed. I am throwing caution to the wind, and having it is acceptable. And for that one thing, that's when people say, you're saying you shouldn't own it. While I'm not advocating against owning it, you should be ready for the possibility that, despite your early investment, the market may still be up and you could experience a substantial decline. Indeed. Sick of constantly losing money and having poor odds? The solution is stake. We're talking about insane odds that have the power to alter your life. You could actually multiply your money by 1,000. Why do you wait? God, look at it now. It's right here. No, what took place, indeed.